Welcome back, everybody. I'm Larry with Buy Low Trades. Subscribe and hit that notification bell to stay up to date with our new content. A common question is, how do you set up your charts and what do you use for your charts? I use tradingview.com. I like to click on the chart tab on TradingView, and then I go into the tab and I click in the ticker that I'm looking for. In this case, we're going to use DFN for an example. When I first pull up my chart, it looks like a mess of things, but if you look up top here, it's D, 4H, 1H. That's for time length, and I'm looking at 1 day chart right now, and that's what's highlighted. Now I choose to look at a candlestick chart. When looking at these candlesticks, each one of these candlesticks represents that 1 day. So each candle is 1 day of information. If you take a look down at the bottom, you'll actually see the date of each candlestick, and that'll give you an idea of what candlestick you're looking at date-wise. Now I go up to the upper left-hand corner, click on this tab here, and you can change the cursor. I like to change it to the cross, and this gives me a better idea of levels, so I can find support levels and resistance levels fast. These numbers on the right represent the price. Say I wanted to mark resistance and support lines fast, you can click on this tab here and mark your lines as a horizontal line, fast and easy. Drag it over to your chart and drop it where you think the support and resistance lines are. Always choose something obvious. In this case, $1.08 looks to be a good support line, and I believe $1.33 acted as a resistance. As you can see, it kind of bounced between the highs and the lows of this range, and it was in a range for some time. Now if we go over here and we look at this candle here, it had an explosive move at the top of the resistance. If you look at this range, it was in this range before, bouncing in between. This candle here is representing a change in trend, and in theory this old resistance should now act as a new support. In this case, it did break that support back down to that $1.08, but it ended up hitting up around that $1.70 in higher range, so people did make some good profit on this one. Now if we see at the time of this recording, this actually is now sitting back on that old support line or old resistance that's now acting as a support, and it will be interesting to see what this continues to do. And if history repeats itself, then at $1.08 this thing should get some support. In which case, this could be a lucrative swing, selling around the $1.34 range, which would give you about 30%. If you were long on the company though, and you thought it would break this old resistance and continue its way up, then you could mark new lines to take profits where you see fit. You can click on this tab here, click on long position. Click here, you place where you want to buy in at. So say we bought in right where it's going to go down to that next level. If we saw it come down to the next level, pull up the green bar to as far as where you'd like to take profits. And the red down here is basically where you would put your stop loss. Now in this case, a 15% loss versus a 41% gain. Here in the middle will show you that a risk to reward ratio of 2.6, which is favorable and something we look for. And this will delete all the drawings on your page. Now, if I wanted to make a long position or start a long position at current prices, we could go back to the long position tab, click on it, and place it a little bit closer to where we're sitting at right now, around $1.33 it looks like. If you believe that it will reach its previous high, then you can put a mark there and look for a $1.84 range to take profits as it acted as a previous resistance. Now I'm gonna hit the trash can again, get the drawings off of the page, clean it up a little bit and zoom out just a little bit and pull it over. Now I want you to look at these lines here. The green and the red line in particular are what we're looking for. Now these are smooth moving averages. Over here on the top left, you can see it says SMMA 5, SMMA 10. That's what I'm using right now. If you want to change the colors of your lines, just double click on any individual line. You can change the style, the inputs, and a few other things that are pretty cool. If you don't have these lines on your chart, you can go up to indicators here and you can click on this tab and type in smooth moving average. You can click the top one here, and I like to click it twice to have two lines on my chart. Then you can go over here on the top left and you can see the SMA 5 and the SMA 10 have now been added to my chart. And it may ask you to sign up for a free account, and I recommend you do so as it's just a simple tool for us to use while trading. Now if I come down here and double click on this red line, I can then go to the style and change the color of the line to whatever color I want. Again, for me, I'm using the red for this one and the green for the other. When we look right here as they separate, this here actually acts as a signal to buy. This line crossing up is a signal that the 5 moving average is now crossing the 10 moving average, signaling a very fast trend. Now, if you look over here, we're gonna see that this line here, the green crossed the red line here, the green crossed the red line here. So it's not always a clear signal, but if you look over here, the lines started to separate. This is a signal of a trend that's starting to happen and something we love to jump in on. Now, if we go left on the chart, we can actually double click here and we can enter in any input we want. For this case, we're going to do 20. And a 50-day moving average. Now again, these are day candles. So if you entered the trade back here, then you had to wait this range of days before this trade came to fruition. So remember, patience is key. Now, because this is a day chart, we can actually go to the day that it gave us the signal and determine what price it was and how a long position would have held up for us. In this case, we were looking at a 37% gain on this trade. Let's zoom out a little bit and see if we can see any other trends. And actually I see one right here. So this one right here, it crossed again signaling a time to buy, and in which case it was a good opportunity for people to make a great trade. And the line crossed back over here, signaling a sell. Now I like to keep it as a 5 and 10 moving averages. This is sharper moves. It's going to be a little harder to determine whether it's a true breakout or not. And this is when other indicators really come into play. But I like to see sharper moves. That way it tells me earlier on whether I want to sell or buy. If you scroll back over to the right, you'll see in our previous example that this tighter SMA 5 and 10 will show us a signal to buy around 75 cents. In this case, it gives us a better timed entry versus the wider SMA timeframes. Now, in this scenario, we do have to be careful of false breaks and keep in mind that this signal is not the only signal we use to buy. And as you can see, this thing kind of hovers around the line every so often. So I'm going to double click on my chart. This allows me to have my bottom indicators on. Now, I know you don't have these on there yet, but this one here is the RSI I want you to look at and add to your chart. All right, you can get to the RSI by going back to the indicators tab, click on it, type in relative strength index or RSI, click on that top one there, and it should place it at the bottom of your chart. Now, this is an oscillator line. It's just a line that goes up and down as you see, but it's a pattern. It's just another pattern. The RSI works in correlation with the chart above. Anytime that it has a spike up, you'll tend to see a spike up in the price. If you see a spike down, it's the same. You usually see a spike down in the price. And you can kind of see a pattern here and kind of compare the two. Now, a general rule of thumb is anything over 60 is considered overbought, and anything below 40 is becoming oversold. This acts as a tool to help you better time your entries. If we use these combination of tools together, then it helps us really set aside our risk to reward and really helps us make smarter investments. In this case, with the SMA signaling a buy and the RSI trending up, this was a good opportunity to enter into a trade. Now you can actually double click on the RSI. This is going to maximize that oscillator and it will show you really what this pattern is doing. All right, let me change my cursor back over to the crosshairs. This will allow us to see the levels that the RSI is actually pinging off of or bouncing off of and responding to. You can actually see the true number of the RSI on the side. And again, anything over 60 becomes overbought. Anything below 40 is oversold. For me personally, I look at this basically as a mountain range. every one of these here acts as a peak to me, and whenever it reaches its peak, it's like everybody wants to jump off the mountain. But when everything's at the bottom and it's in the valley at the very bottom and technically oversold, that's when all of a sudden there's room for everybody wants to jump on and climb the mountain. Whenever I'm trying to time my entry, I like to look for this thing to be on the oversold side. That way I know there's room to grow. Now, if we look at these dips here, these things really went off the rails and got down to around the 17, 18, 20 range on the RSI, which again, anything under 40 is considered over. Now, if you zoom back out of the chart, again, you can see the correlation between the RSI and the movements on the price action on the chart itself. So whenever there was an upward movement on the chart, there tends to be an upward movement in the RSI. And again, that works for the opposite. If there's a downward movement on the price, then it tends to be a downward movement on the RSI as people are selling and it becomes oversold. One thing to keep in mind is if you click on a different time frame, it's going to show you a different RSI. So when you talk about an RSI for the day, it may be different than the RSI for the 4-hour chart or an RSI for a 1-hour chart. In this case, when I click on the 4-hour chart, it changes the RSI drastically. If you notice these blue bars on the chart, these are actually the aftermarket and pre-market moves. If you put a 4-hour chart on, you can see these. If you put a day chart on, they don't show you the pre-market and aftermarket. Now, this can be very important because there's a lot of moves that happen in the pre-market and aftermarket, and if you're looking at only day charts, then you're not seeing these moves happen. If I zoom in on our candles to get a better idea of the candles themselves, and again, these are 4-hour candles, so each one of these candles represents 4 hours. So this one's 4 hours, this one's 4 hours, and again, so on and so forth. Now, if you just double click on your chart, it will expand your chart. And if you double click on it again, it will show the RSI below. Now, when looking at the RSI, if we change our time frames, you'll notice that the RSI will change as well. And so will the smooth moving averages. Again, make sure that you're comparing multiple time frames, as this will give you a better idea of trends in the market. If I go back to a 4-hour chart, you're going to see here that there's the signal to sell. Now over here, it gave us a signal to buy, and there was an upward movement. But if we go up here and we change it to a day chart, this signal is not apparent. Right now, it's showing still a buy on this chart, which is why you want to compare multiple time frames. If I click on the 15-minute chart and zoom out, then each one of these candles represents 15 minutes of information. And that's why you're seeing so many candles on your screen when I zoom out. That's because it's a short period of time, but there's a lot of information with each one of these candles. So every 15 minutes, one of these candles will post, and that will give you the information for the past 15 minutes. And keep in mind that the blue that you see in the background on a smaller time frame chart, again, these are the aftermarket and pre-market moves. So you wouldn't see this on a day chart, so make sure that you put it on a smaller time frame to see these moves. This is the SMA line, you follow it, and again, it acts as signals to buy and sell. Currently on the 15-minute chart, this is showing a sell. Now, if we flip back to the day chart, this thing is still signaling a buy, although the RSI and the MACD down below are trending down. So I also use the MACD when spotting trends, but this one they may not allow you to use with the RSI without having an account. So if not, then just exit the RSI off of it and then go to the indicators, add MACD, and then this will pop up here. This is another indicator to spot trends, and you can use this again as a signal to buy or sell when you're sitting on your trades. This is another signal, and if you put multiple signals together, then you have a better chance of a higher risk to reward ratio. What you'll see is that the MACD acts in correlation with the smooth moving averages and the RSI. If all three are giving you signals of trends going up or trends going down, this can give you a signal to buy or sell. Now you can change the colors of your lines any colors you want. Again, I have mine red and green. Whenever the green crosses the red up, it's a signal to buy. Whenever the green crosses the red down, it's a signal to sell. Now you can actually double click on this as well and expand it and kind of see if you see any patterns with these colors, patterns with these lines, because a lot of times these things work in patterns. All right, I'm going to double click back out to the chart. and allow us to see everything at once. Now, if you compare the chart again, these lines here, you can compare all three of these together and you'll really get a sense of when a trend is happening and when a trend is reversing. Now, I'm using DFFN as an example because a buddy of mine has this stock and I wanted to kind of go over it a little bit for him. But you could go over any previous stock. You could pull up Apple or Facebook and really analyze the MACD, the RSI, and the simple moving averages to see where it signaled a buy and where it signaled a sell and see if you're correct. But always keep in mind that these different time frames will show you different information. So it's good to analyze a chart on multiple time frames. And if you just double click on any one of these, like here, the MACD, you could double click on this, expand it, and really see its trends. You can see where the lines crossed and showed you a time to buy, opposed to a time where they crossed the opposite way and showed you a time to sell. You can analyze this again on any chart, MACD, RSI, smooth moving averages. These things I believe can help you become a better trader. If you can use them to spot signals to better time your entries, then this can be a powerful tool for you to make a better position in going long on a company. That's it for today's video, guys. I appreciate you staying with me. If you could, hit that subscribe button, hit the notification bell to stay up to date with my new videos, and follow us on Instagram. I have free trade alerts on there, and I'll see you in the next one, guys. Take care.